So hi everyone, thank you so much for joining me again. My name is Chantal Sanchez. I'm with Pacific Sotheby's International Realty in Palm Springs. And today I have joining me again is Jim Boyer with Great Pacific Funding. And he's also based out of Palm Springs. So today, just really quick, we're gonna talk about some of the products available right now in the lending world. As everyone knows, the coronavirus crisis is still going on, but there are still buyers and there are still sellers, and real estate is still moving on forward. So, Jim, go ahead and tell us right now a little bit about what to expect if you're a buyer on this market, and what type of products could you apply for?
Well, currently in the jumbo market, which in Riverside County is loans over 510,400. That's considered jumbo product because you can't send the loans to Fannie Mae or Freddie Mac. There's still some 30-year fixed rate money available, but it's sort of ridiculously priced. It's in the 4.75% to 5% range right now. There is some adjustable rate product that's fixed for 7 to 10 years, and that's in the low fours, about 4.125% right now. So,
So we're not in the 3.5 like we were, 3.25.
certainly not there. No, those products are gone. No one has that money available right now. I mean, it's not there. And most people don't even have any kind of 30-year fixed rate. There's just really one or two players out there that have that money, and we're hooked in with one of them, and it's priced pretty high. So what we're seeing is people inquiring about, okay, I'll take maybe a 7-year fixed, and the investors of those products know that people, as soon as rates come back down, they're going to refinance out of that product. So what's happening is they're not even giving you an option of getting that loan with 0 points, because
Wow.
because what they're saying is, hey, look, we know that loan's going to go away in probably a year, if not sooner. So there's no reason for us to give away the price on that loan, to
Okay.
do it with 0 points. There's just no reason for them to do that, because if they don't keep a loan on the books for about 3 years, they really don't make any money on it.
Right. I
So
remember you were telling me that last time.
yeah,
So
so if they want at least to make a point coming in on those deals, so that you have some revenue coming in off of them. So so the other
what about
things that are
first-time
available,
buyers? Are
first
first-time
time
buyers
buyers,
have a hard time?
it's getting a little tougher. A big mortgage company that begins with Chase um, announced this week that they weren't going to be doing any loans with that didn't have a credit score of at least 700,
I
and
heard that.
then and 80% loan to value.
Right.
But then they later on, that somehow that information got out, but they did not get out the information that they were still going to have first-time buyer programs available.
Okay.
So that those things don't really apply to that product. There's still first-time buyer product available, 30-year fixed rates in the low threes, low 3 interest rate range.
Okay.
Um, there's plenty of room. There's plenty of loans available. 30-year fixed is the predominant product for Fannie and Freddie Mac.
Right.
So you can get loans. It's going to get a little tougher. With Chase making that move to raising their minimum credit score to 700, there's a reason they did that, which is not just Chase making that decision, I think what's happening is when every loan gets made, when we make a $500,000 loan, that goes on our credit line. Then we turn around and sell it to some other investor, and they in turn turn around and sell it to Fannie Mae and Freddie Mac. What's happening is that goes on a line of credit effectively. It's like a credit card for us. So we make a loan, we use our credit card to make the loan. Then we turn around and sell the loan to somebody else, and they pay us back on our credit card. So what's happening is, I think, is the people who have the lines of credit, who lend to lenders, are going to be raising the requirements, raising the credit scores that they want to accept on those.
I got joined by someone now, so we have my little buddy.
Hi, bud. How are you? What you doing, bud?
So
Yeah.
which probably means that we're gonna have to ask the last question, but
Okay.
it's okay. So anyway, no, I just wanted to say, what about for, mostly here in Palm Springs, we have second home market and we have, vacation homes and all of that. So what about for long-term investors, who are looking for maybe easier money to get, maybe hard money loans? Are those impossible to get or just going to be so expensive?
I think they're going to be too expensive. We had a lot of loans that were available that had alternate qualifying. Those are gone. We had, I think, if you're getting a loan up to $500,000, we're still good on doing those. We just use them as a second home. That shouldn't be a problem at all. We can do 90% financing on a second home still.
So you can still do those financing on those second homes then?
Yeah, as long as your loan amount, it doesn't go above 510,400.
That's right. That's the magic number, especially out here. I do know
Especially
that
out
and I
here,
remember
yeah.
that much.
Yeah.
Well, I don't know if there's anything else that you wanted to kind of talk about, like
No,
I said, working from home with kids.
it's a wonderful life. No, I just think that there's money is still available.
Okay.
It's in some situations it's a little harder to get than it was 2 weeks ago or 3 weeks ago, but there still is a lot of money available to make loans. So I don't think it's a situation where it's going to dry up anytime soon.
So basically your last, kind of the last word that we could say is saying that there are things out there, but, it's not like it was, before the crisis and before everything kind of went shut down. But just be wary and talk to your lender, see what your options are, and maybe not even wait too long because we don't know what is going to be available in the future once all of these, forbearances are drawn out.
I agree. I think if someone is thinking about buying, I would say do it now, because my gut feeling is that things are going to get a little tighter before they get better.
I agree. And well, we'll see and we'll write it out. And I look forward to talking with you again soon. And thank you for doing this again with me. Like I said, we're all still connected, and I know that we're all a little bit zoomed out, but it's fun to do these short and quick little interviews.
All right. Thanks.
Thank you so much, Jim. I'll talk to you soon.
Okay. Bye.